Welcome back to Explain the Charts, everyone. Today, September 16th, 2025, we're focusing on one of the most talked about stocks, Tesla, ticker symbol Tesla. Recent news has sent shockwaves through the market, with Elon Musk himself making a massive $1 billion stock purchase and Tesla's board proposing a compensation plan that could grant him nearly $1 trillion if ambitious performance targets are met. This incredible proposal ties Musk's pay to Tesla achieving market caps as high as $8.5 trillion, alongside milestones like delivering 1 million robotaxis and 1 million Optimus robots, fueling intense speculation around the company's AI and robotics future. Furthermore, optimism around potential Fed interest rate cuts and advancements in autonomous driving, specifically Nevada's approval for robotaxi testing and a San Francisco launch in July, have added to the recent positive sentiment. However, it's not all green lights. Tesla has faced a plunge in sales this year, battling fierce competition from the likes of China's BYD and traditional Detroit automakers, and some analysts remain cautious due to the stock's extremely pricey valuation and expiring EV tax credits. Now, let's turn to the charts to see how these events are reflected in the price action. Starting with the daily chart, we can clearly see the significant volatility Tesla has experienced year-to-date, trading between a 52-week low of $212.11 and a high of $488.54. Notice the strong bullish momentum that has built since mid-August 2025, pushing the price upward from the $300 range. This upward trend demonstrates a clear market reaction to the positive news flow surrounding Musk's renewed commitment and the company's AI strategy. The candle on September 12, 2025, shows a substantial jump, closing at $395.94, which correlates perfectly with the news of Elon Musk's $1 billion stock purchase disclosed on Monday, September 15th, but likely initiated on the 12th. This move pushed Tesla to near the $396 level mentioned in the Economic Times, validating its importance as a recent benchmark. The chart shows the stock currently pulled back slightly, closing at $410.04 yesterday, on September 15th, after touching highs around $425.70 earlier in the day. A key resistance level to watch in the short term would be the prior high of $425.70 and ultimately the 52-week high of $488.54. On the downside, initial support appears to be forming around the $380 to $390 zone, which was the breakout area after Musk's purchase. Looking closer at the recent surge, let's switch to the hourly chart. On the 1-hour chart, zooming into the last few days, the immediate impact of the news is even more pronounced. The candle on September 12, 2025, specifically around the 1329 Universal Time Coordinated mark, exhibits an explosive move with significant volume, directly reflecting the market's enthusiastic response to Elon Musk's share acquisition. We can observe several large green candles pushing the price from the low $370s to nearly $397 within hours. The price then consolidated around the $390 to $395 level for the remainder of that day and through early Monday, before another strong push saw it break above $420 before pulling back. The recent peak on September 15th, around $425.70, now acts as immediate resistance. Volume has been notably higher during these upward movements, indicating strong buying interest. Conversely, some retracement candles, like those on September 15th after the initial surge, show profit-taking, but overall buying pressure seems sustained. For shorter-term traders, the rapid price changes on the 15-minute chart can offer crucial entry and exit points. Moving to the 15-minute chart, we can see the micro-movements during the intense trading on September 15, 2025. The initial gap up and subsequent strong upward movement from the open, quickly taking price from around $400 to the $420s, illustrates aggressive buying. Notice how the rallies often encounter minor resistance before consolidating and making another push. The intraday high around $425.70 served as a temporary ceiling from which price retraced. This smaller time frame allows us to identify immediate support around $407 to $408 as traders attempt to defend recent gains. A significant reversal would likely see the price break below the support zone with high volume. The current candlestick data shows some stabilization around the $410 mark as of the end of the trading day yesterday, suggesting a cautious wait-and-see approach from the market after the initial euphoria. This highlights the importance of monitoring short-term price action around key levels following major news. Looking at the bigger picture, reasons to be bullish on Tesla in the long term are compelling. Elon Musk's massive personal investment signals strong confidence, and the proposed $1 trillion pay package provides an unprecedented incentive for him to achieve truly transformative goals for the company, particularly in AI and robotics, such as Optimus humanoids. The progress in robotaxi development, with testing in Nevada and recent launches in Austin and San Francisco, positions Tesla for potential disruptive growth in autonomous services, which Morgan Stanley analysts believe could significantly add to share value. Furthermore, hopes for Fed rate cuts could boost riskier stocks like Tesla, providing broader market tailwinds. However, the bearish arguments cannot be ignored. The reported plunging sales year-to-date and intensifying competition, especially from China's BYD, pose a significant challenge to Tesla's market share and profitability. The stock's current forward P/E ratio over 136 makes it extremely pricey, according to some analysts, suggesting a high risk-reward profile. Expiration of EV tax credits in the U.S. could also impact future demand. Investors must weigh these factors carefully, considering Tesla's volatile history and ambitious future targets. To recap, important price levels to watch include the immediate resistance at $425.70, followed by the 52-week high of $488.54. Initial support is around $407 to $408, with a stronger support zone potentially forming between $380 and $390. Further down, the psychologically significant $350 mark and the yearly low around $212 remain critical long-term support levels. An unbiased prediction for the short term is that Tesla will likely consolidate around the $390 to $420 range, with a 60% likelihood, as traders digest the rapid gains. A break above $425.70 with strong volume could signal a further push towards the $450s, reinforced if more positive news emerges regarding robotaxi expansion or AI development. Conversely, a sustained break below $390, especially on increased selling volume, would indicate a reversal, potentially driven by concerns over sales or broader market weakness. In the long term, reaching Musk's proposed $2 trillion market cap target would necessitate a price well into the $600s, but this is highly contingent on successful execution of his aggressive AI and robotaxi vision, which carries significant risk and an estimated 40% likelihood in the next year. Things to look for include upcoming shareholder votes on Musk's compensation, further announcements on robotaxi deployment, and any new sales data releases. Pay close attention to market sentiment around these catalysts and watch for volume confirmation on any significant price breakouts or breakdowns. Thank you for joining Explain the Charts, and happy trading!